Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Sandy, your guest host from Keller Williams Legacies, here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamoan here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Steve, let's kick off with some exciting developments in the financial markets. The odds of the Bank of Canada cutting interest rates this month have soared to 90% following a weaker than expected jobs report. That's quite a jump, isn't it?
Absolutely, Sandy. These market-based odds have risen sharply from around 40% last week, driven by a sluggish gross domestic product reading and dovish comments from Federal Reserve officials. It's clear that the economic landscape is shifting.
The job numbers were quite disappointing, with Canada losing 65,500 jobs in August, mostly in part-time positions. This marks the worst level of job losses since January 2022. What do you make of this, Steve?
It's a significant downturn, Sandy. The unemployment rate rose to 7.1%, which is a level we haven't seen since May 2016, excluding the pandemic years. Analysts had expected a 7% rate, so this was a bit of a shock.
And it's not just Canada feeling the pinch. The United States also reported weaker job growth, with non-farm payrolls increasing by only 22,000 jobs in August. Economists had forecasted a rise of 75,000 positions. Do you think this could influence the Federal Reserve's decision as well?
Definitely, Sandy. The market is now pricing in a high probability of a rate cut by the Federal Reserve, with 3 cuts anticipated by the end of the year. This is creating a ripple effect across the financial markets.
Right, and with the Canadian dollar experiencing volatility and bond yields moving lower, it's clear the markets are reacting to this data. The 5-year yield in Canada, closely watched because of its impact on fixed mortgage rates, dropped to 2.805%, its lowest since early June.
Indeed, Sandy. Lower bond yields generally lead to lower mortgage rates, which could provide some relief to homeowners and potential buyers. However, it's important to remain cautious as these economic signals could indicate underlying challenges in the broader economy.
Economists are weighing in on this situation too. Royce Mendez from Desjardins noted that the weakness in the labor market, previously isolated in trade-dependent sectors, is now spreading across the economy. That's concerning, wouldn't you say?
Yes, it is, Sandy. Mendez pointed out that the prime age unemployment rate rose, which could affect households with significant mortgage balances. It's a reminder that these economic shifts have real-world implications for Canadians.
And David Rosenberg from Rosenberg Research mentioned that the widening labor market slack should ensure that cost pressures remain contained, which might ease some concerns about inflation.
True, and Leslie Preston from TD Economics highlighted how the job losses in July and August have reversed the gains from June, indicating a cooling labor market. It's a complex picture with many moving parts.
Andrew Grantham from CIBC also emphasized that the decline in employment, particularly in trade-exposed sectors, underscores the need for the Bank of Canada to consider rate cuts. The unemployment rate increase to 7.1% adds more weight to this argument.
Absolutely, Sandy. Doug Porter from BMO Capital Markets noted that while inflation hasn't given the Bank of Canada the all-clear, the weak jobs report fully supports the case for easing monetary policy.
It's fascinating to see how economists are aligning on the need for rate cuts. Tony Stillo and Michael Davenport from Oxford Economics believe that the trade war's impact is broadening, and the Bank of Canada might need to lower rates cautiously.
Yes, and Thomas Ryan from Capital Economics added that the rise in the unemployment rate, despite a declining labor force, indicates growing slack in the labor market. It's a signal for potential rate cuts in September and December.
Veronica Clark from Citi echoed similar sentiments, suggesting that the soft employment report solidifies the need for a resumption of rate cuts. It's a consensus that's building momentum across the board.
And finally, Claire Fan from the Royal Bank of Canada pointed out that the upcoming Consumer Price Index report will be crucial in determining the Bank of Canada's next move. It's all about balancing these economic indicators to make informed decisions.
Let's delve into how mortgage rates are currently hanging on the Bank of Canada's upcoming decision. With the bond market suggesting a potential rate cut, mortgage shoppers might be in for some savings this month. Steve, what are your thoughts on this?
Well, Sandy, money market traders are currently pricing in a 2 in 3 chance of a rate cut by the Bank of Canada on September 17th. This may seem surprising given that core inflation is still above the central bank's 3% tolerance. However, traders appear unfazed by this.
That's interesting, Steve. It seems that much hinges on the upcoming employment and inflation data, which are due out on September 5th and 16th. These could be the deciding factors in whether or not we see a rate cut.
Exactly, Sandy. While there is no immediate threat of rate hikes, the current national mortgage pricing hasn't changed in the past 2 weeks. If the economic data turns out to be bearish, we could see fixed rates dipping closer to, or even below, the high 3% range.
Some lenders, like True North Mortgage, are already offering fixed rates as low as 3.99% for a 3-year term. Regional providers such as Butler Mortgage are advertising even lower rates, albeit by a small margin.
Yes, and for the lowest published 5-year fixed rates, Citadel Mortgage currently leads with 3.94% for insured and 4.04% for uninsured mortgages. In Ontario, RateBuzz is offering even better deals with its 5-year rates at 3.84% insured and 3.94% uninsured.
It's a competitive market, Steve. The talk of Bank of Canada cuts is also likely to increase interest in floating rates, although one cut would merely align them with the lowest 3-year fixed rates.
That's right, Sandy. The market is only pricing in one additional drop in the prime rate after this potential cut. It's important for mortgage shoppers to stay informed and consider their options carefully.
Let's shift our focus to the Greater Toronto real estate market, which is seeing some intriguing changes. Despite a slight uptick in buyer interest, the market's recovery seems to be slipping further away. The Toronto Regional Real Estate Board data indicates a minor year-over-year sales increase, but demand still remains historically low.
That's right, Sandy. The inventory is flooding the market, reaching a record high, which is forcing deeper price cuts. The typical home price in the Greater Toronto Area fell by 1.15% in August, equating to an $11,300 drop. It's one of the largest monthly declines in the past year, which certainly raises questions about where the market is heading.
Indeed, Steve. Prices have now dropped 24.35% from the record highs we saw back in February 2022. That was during the height of the buying frenzy, when low interest rates fueled a surge in purchases. It's quite a change from those times.
Yes, and while there was a 2.35% increase in sales from last year, it's important to note that last year was one of the weakest Augusts in a generation. This year is only slightly better, marking the second worst month in the past 25 years. For the market to normalize, we'd need sales to surge by 57% compared to last month, just to reach the modest volumes of August 2019.
And Steve, let's not forget about the inventory levels. The Toronto Regional Real Estate Board reported 14,038 new listings in August, up 9.36% from last year. This is pushing total inventory to unprecedented levels, with 27,495 active listings, a new record for August.
The increase in listings is outpacing sales by a significant margin, Sandy. This imbalance is setting the stage for potential further price adjustments. The market is seeing a flood of new construction completions, particularly investor-owned units intended for flipping, which might add to the supply glut.
That's a good point, Steve. Toronto and Vancouver are often seen as leading indicators for national trends. While Canada is experiencing its second largest real estate correction, many regions haven't yet felt the full impact. This could mean that other markets might also face similar challenges in the near future.
Absolutely, Sandy. It's crucial for buyers and sellers to stay informed and cautious in such a volatile market. The real estate landscape is changing rapidly, and understanding these dynamics is key to making sound decisions.
Steve, let's talk about the recent comments from Peter Routledge, the head of the Office of the Superintendent of Financial Institutions, regarding the current state of the condo market in Toronto and Vancouver. It seems like the condo market is facing some significant challenges, but Routledge suggests that the country's top lenders are well prepared to handle these struggles. What are your thoughts on this?
Sandy, it's interesting to see that despite the condo market's downturn, especially in Toronto, the regulator believes that the banking system is well capitalized to withstand these pressures. Routledge's comments at the Scotiabank Financial Summit highlight that the systemic stability of our financial institutions remains intact. This is reassuring for both lenders and potential buyers.
That's a good point, Steve. The data from the Toronto Regional Real Estate Board shows a 10.6% drop in average condo prices in the 905 region just last month, with sales also declining. While this might seem alarming, Routledge suggests that the increased listings could actually benefit first-time buyers who have been struggling to enter the market. It's a bit of a silver lining, wouldn't you say?
Absolutely, Sandy. The oversupply in the condo market is driving prices down, which could indeed present an opportunity for younger Canadians looking to purchase their first home. However, it's important to note that the regulator is still keeping a close eye on commercial real estate risks. Routledge mentioned that while they're not overly concerned, they are monitoring the situation closely.
And it seems industry analysts are also pointing out that the condo market shows no immediate signs of stabilizing. While this poses challenges for investors and developers, it might just be the opening first-time buyers have been waiting for. Victor Tran from Tango Financial mentioned that there's no rush for buyers right now, as more inventory is expected to hit the market soon. Do you think this wait-and-see approach is wise?
I think it makes sense, Sandy. With the expectation of further price drops, buyers might find better deals if they hold off for a bit. This cautious approach could benefit those who are not in a hurry and want to maximize their purchasing power. However, it's crucial for buyers to stay informed about the market trends and make decisions based on their individual circumstances.
Definitely, Steve. As the market continues to adjust, it'll be interesting to see how these dynamics play out. For now, it seems that while there are challenges ahead, there are also potential opportunities for those ready to enter the market. It's all about staying informed and making strategic decisions. Steve, there's some big news coming out of the alternative lending sector today. Alta West Mortgage Capital Corporation has announced its acquisition of Premier Home Mortgage. This is a significant move in the industry, wouldn't you say?
Absolutely, Sandy. Alta West Capital is already a well-established name in the alternative lending space, and acquiring Premier Home Mortgage, a firm with a strong reputation for serving mortgage broker partners and borrowers, is a strategic step forward. This acquisition seems aimed at broadening their product offerings and streamlining operations.
Right, Steve. Premier Mortgage has been a steadfast player in the financial services sector for 40 years, known for its diversified investment fund and consistent service. The acquisition not only extends Alta West's reach, but also fortifies Premier's capabilities with an enhanced product suite and modernized technology.
Exactly, Sandy. George Boutros, the CEO of Alta West Capital, mentioned that this move is about optimizing economies of scale and realizing enhanced efficiencies. It's about leveraging the strengths of both companies to create a stronger platform for clients, investors, and communities.
And it seems that the foundation of shared values like trust, stability, and security has been a key driver for this acquisition. Both companies are aligning their expertise and resources to elevate their platforms, which is quite promising for their stakeholders.
Yes, Sandy. John Mercury, President and CEO of Premier Mortgage, expressed excitement about this alignment, highlighting how the combined synergies will expand business operations and drive growth. It's a win-win situation for both parties involved.
With Alta West Capital's extensive experience in the alternative lending market, especially in Western Canada, and Premier's trusted partnership with mortgage brokers across several provinces, this acquisition could indeed create greater long-term value for all stakeholders.
Absolutely, Sandy. It's a strategic move that not only strengthens their market position, but also enhances their service offerings, particularly for borrowers who don't fit the traditional bank mold.
It's an exciting development, Steve. It will be interesting to see how this acquisition unfolds and impacts the market moving forward. As always, staying informed about these changes is crucial for those in the real estate and mortgage sectors.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.